another video of QHSE Companion related to the subject of Six Sigma and DMAIC and how we can use those tools to implement the seeds for any upcoming improvement on a certain product or service, or in any matter if we start a project and that we intend that the output result and the end result to be very successful. The subject we'll be addressing here today will be one of the tools that we will use within those frame of Six Sigma and DMAIC. It is the business performance and financial measures in DMAIC project. It's a very important subject, we need to pay attention to. Actually, we want here first clearly understand how each phase of DMAIC, the phases of course, define, measure, analyze, improve, control, process directly influence the financial outcome. Those processes, they will give you a brief outline that will explain to you how those phases integrate into the financial measures of your project. So if we start first with the define phase, you have to understand what is your objective. Here you have to have and establish clear objective, financially driven objective for the improvement project. Example, you intend to reduce cost by 10% or increase revenue by 5%. Here we'll identify and articulate the financial rationale for the project, which will ensure then alignment with strategic business goal. Then we go with the measure phase. In the measure phase, there is a baseline establishment. Here we quantify the current state using financial metrics to establish a clear baseline for compromise. Example, current cost using existing, of course, revenue. And we have to have a financial target, which will define specific financial KPI that the project will aim to influence, and will set a clear target for improvement. And then we come with the analyze phase. This phase, we are looking for the root cause identification. We'll analyze financial data to pinpoint underlying causes of financial inefficiency or gaps. Here we evaluate the financial implication of identified issues, prioritize problem based on their financial impact. Then we move on to the improve phase. Here it's a solution implementation phase. Here we apply solution aimed at financial targets such as reducing operational cost, improving efficiency, or increasing output quality. Here we monitor and measure the financial results of the improvement, compare them against targets we set in the, of course, measure phase. And then last and not least, the control phase. Here it's the financial monitoring phase. Here we establish ongoing monitoring of key financial metrics to ensure improvement are sustained. Of course, as you know, we implement standard procedure that embed the financial improvement into daily operation. By following this structured approach, of course, each DMAIC phase will contribute directly to achieving significant financial improvement, thereby ensuring that process enhancement translates into measurable financial benefit. Remember, measurable, something you measure it, financial benefit. This integration, of course, not only enhance the project outcome, but also align the operational changes with business objectives. Because remember, the whole goal here is to improve a process, and that will foster, of course, a culture of continuous improvement driven by that financial performance. Now, why we say financial measures? Integrating financial measures into the DMAIC process is essential to gauge the real impact of a process improvement, because we have to have something to measure it effectively. The first thing we start with, objective evaluation of success. It's a financial measure that provides quantifiable metrics, objectively assess the success or failure of a process improvement initiative. And also, it's a metric such as cost saving, revenue increase. You see all this measure, you can measure it. Return on investment and reduce operational cost. Will offer to us concrete evidence of improvement, because it's something you can measure. Also, financial results allow for benchmarking against past performance or industry standard, which will enable us to have a clear view of how process changes enhances or detract from financial performance. Second, it will align process improvement with business objective. Here, by integrating financial measures, organizations can ensure that process improvement are directly aligned with their strategic business objective, such as profitability, market share growth, or cost leadership. Then we'll have financial metrics, which will keep the focus on value-added activity, which will help team prioritize initiatives that offer the highest financial return impact. Third will be to enhance stakeholder communication and buy-in. Remember, financial metrics are easily understood by stakeholders across the organization, including executives who may not be familiar with the technical aspect of the process improvement. If we can demonstrate that to them, the financial benefit in a universally understood term like dollars saved or percent revenue increase, that will help in securing their buy-in. Again, regular reporting of those financial outcomes makes the progress of the DMAIC project transparent, the key here, which will facilitate, of course, clearer communication, and more effective management oversight. And the fourth thing will be sustainability and long-term focus. Here, the financial measure will help to ensure that improvement are not just one-time gain, but are sustainable over the long term. They provide a continuous feedback loop for monitoring performance post-implementation, which can justify the allocation, of course, of resources, from other areas for the purpose of continuous improvement initiative. And fifth, will facilitate proactive decision making. Here, the financial metrics will do what? When tracked, over time, they help predict trend and potential issue before they become significant problem. This proactive approach can lead to cost saving and efficiency improvement. Financial outcomes also help quantify the risk associated with various process changes, which allow management to make informed decisions about where to implement changes with the highest likelihood of success. And now we move to a real-world problem. Let's go first for the manufacturing sector. Here, the story will be a manufacturing company implemented a DMAIC project to reduce scrap rate. So financial metrics such as cost per unit of production was used. The monthly scrap costs were tracked, and the intention is to reduce scrap rate by 20%. Doing that, the company did what? It saved 1 million annually. This saving were directly related, or reflected in improved gross margin, which validate the success of the project. And in the service sector, let's go for example, a customer service. A telecommunication provider used also DMAIC to improve its customer service process. Did what? Implemented changes that reduce call handling time. The company improved customer satisfaction score, which led to higher retention rate and increased average revenue per user. Financially, this translated, of course, into an additional 3 million in revenue quarterly. That demonstrates a clear link between process improvement and financial performance. By integrating financial measure, remember, into DMAIC, financial measure, because company always are reacting to financial measure. Organization can not only enhance their ability to measure and communicate the impact of changes, but also ensure that these improvements are aligned with broader business goals. This approach enhances the effectiveness of the DMAIC process and ensure that improvement contribute to the financial health of the organization. Now, let's look or have a small look at some of these KPI. We're just gonna choose some of them that are common. There are plenty, of course, available, but we'll use the one that's in common. For example, KPI also, we know that it provides crucial insight into a company operational success, financial viability, and investment potential. Now, let's look, for example, as the KPI, return on investment. It is what? It's a measure. It measures the gain or loss generated on an investment relative to its cost. Very simple. And it's used to evaluate the efficiency of investment or compare the efficiency of several investments. You know, the formula, as you can see it, straightforward. You know, net investment gained, net, that gross, divided by the cost of the investment. Let's say you have an investment of $1 million, you know, and of course the gain that you that's here will go cost of investment $1 million, and then you gain $10 million, but you deduct from that big $10 million all the other extra, you know, meat, which is like the taxes, you know, whatever other, loans, interest, come up only with the net investment gain, whatever you gain as a net, you know, that you don't need to pay anybody anymore out of it. That's the only divided by the cost of investment, multiplied by 100, then you get to that point. Also, cost saving. It's the reduction in cost achieved by implementing business improvement. Example, saving from reduced material cost, you know, operational improvement, or, you know, cost that you saved when you negotiate contract with your supplier, etc., etc. Another one, let's go with profit margin. What it does, it measures how much out of every dollar of sale a company actually keeps in earning. The purpose of it is important for assessing the financial health of a business, indicating how effectively it covers sale into profit. Of course, the type we use is gross profit margin, operating profit margin, and net profit margin. Those are the types. And the formula is very simple, as you can see. Revenue, take away from it cost of goods sold, take away from it operating expenses, and take away from it interest, take away from it taxes. You know, this will become like net, divided by the revenue, multiplied by 100, that's the net profit margin. Simple like that. Okay? Now, for operating efficiency. Also, it's another KPI, which evaluates how well a company uses its assets and liability to generate sale and maximize profit. You know, often assessed through metrics like asset turnover ratio, operational cost ratio, and efficiency ratio. And you can see the formula is very straightforward, you know, nothing to it. Just operating expenses divided by the total revenue multiplied by 100. Another KPI we use, it's the leading and lagging. Okay, Lag indicators, it's a metric that reflects the success or failure after an initiative has been implemented. Example, overall customer satisfaction, net profit, return on investment. And then we have a lead indicator. What it does is predictive metrics that forecast future performance and indicate potential success before the outcome are finalized. Example will be the number of customer call handled in the future, employees training hours, compliance with process checkout, and so on and so forth. So here we can see from that image the leading indicators, an indicator of performance that might predict future success, and then the lagging indicator is an indicator of past performance that measure how we perform, and then those are some examples of that. So now we'll go and dive into each phase of the DMAIC and where those business, performance, and financial measure will be applied. As you can see, successful project requires balancing both the lead and the lag indicators to not only measure outcome, but also to effectively manage and guide ongoing processes. For example, in the define phase, you will identify critical lead and lag indicators relevant to the business objective or plan of the management. In the measure phase, you will collect the baseline data for both sets of indicators, the lead and the lag, to establish performance benchmarking that you want to achieve. In the analyze phase, you will examine the relationship between lead and lag indicators to identify drivers of success or failures. In the improve phase, you will implement changes that positively affect lead indicators, thereby influencing the lag indicator. And the control phase, and that will be the final phase of a DMAIC, you will monitor both indicators to ensure sustained improvement and to predict future trend. So now we'll dive in where you will use those DMAIC tools of business performance and financial measures within each phase of the DMAIC. What would be your goal? First, to clearly articulate the problem and the expected financial impact of solving it. Examples we're going to be using here, let's go, for example, in the manufacturing sector, defining a project to reduce scrap rate, expected to save the company about $500,000 annually. Or in the service sector, identifying inefficiency in customer service that could lead to high client churn that costs us about $1 million per year. And what is the critical to quality element that you will be looking for? Here you will define measurable financial outcome, which will link to customer satisfaction, for the service, and cost reduction for the scrap. Now, let's dive in. Here we're diving in slowly, and then down the road we're going to go a little bit more deeper. Measure phase. What will be your goal? First, you establish the current financial baseline, because you have to have a baseline where you want from that point going upward, and quantify that problem. Tools you'll be using here: financial dashboard, could be cost accounting system, and performance metrics. Example, let's say you want to measure the cost of poor quality in a factory production line, where defect costs an average of $200,000 per month. Now let's go for the analyze phase. What would be your goal? Here you identify the root cause that are impacting the financial matrix. What the techniques you will be using, what the tools. Pareto analysis, which will identify major cost buckets, or regression analysis to find correlation between independent variable and dependent variable. Remember, independent variable, like the X, Y, Z, and then the response will be your, dependent variable. Example here will be, let's go for example on the production sector. You analyze machine breakdown, which are causing 70% of the production delay, which lead to a 300,000 in lost out monthly. Now, 70% of delay. Now you want to know where that 70% is coming from. That's why Pareto chart here will be a good, indicators. Service sector, for example, you analyze wait time, which lead to poor customer satisfaction and a 10% drop in contract renewal. Now, let's go for the improve phase. What will be your goal? Implement and verify solution that improve financial metrics. What will be strategy that you will implement or use? Lean techniques, quality improvement tool like Six Sigma, exactly what we are doing right now. Example in production sector will be, let's say you want to redesign the workflow in a manufacturing plant to reduce idle time. That could save the company around $450K, dollars annually. In the service sector, you want to implement a new CRM system in a service firm to enhance customer interaction, which will increase, upsell rate by about 15%, which will improve annual revenue about 2 million. Control phase, what exactly we'll be doing here? What's your goal? Here you ensure the implementation are sustainable and continue to provide financial benefit. Sustainable, that's the key. Method you will be using here, statistical process control chart, to ensure that you're not going out of the, outside the limit. Performance dashboard and regular audits, Let's say for a production sector example I give you here, set up a real-time monitoring system on the production floor to maintain reduced defect level, which will ensure, saving of 500 per year. On the service sector, maintaining, for example, enhanced service protocol that will ensure customer satisfaction score remain above 85%, which will secure revenue increase about 3 billion. So, as we talked about, there are long-term benefits, consistent saving and quality improvement, which will lead to sustained financial health. Now we'll dive into what is the connection between DMAIC and finance. Each phase of DMAIC not only progress the project, but strategically enhance financial solution. So we're gonna go now for each phase one by one, and 3 elements will be tackling: the input, the output, the impact, in a quick way so we can understand. So the first one will be define phase. What will be the input? Project selection based on financial goal. Example, now that's input. Remember, we're doing like a project. Example, cost reduction or revenue increase. What's the output you are looking forward? Clear financial targets and KPI established. That's the output you want from it. That's in the define phase. What's the impact will be? You set the financial scope and objective of the project. Then you move to the measure phase. What would be your input in the measure phase? Data collection on current financial metrics. What would be your output you are expecting out of that phase? Baseline financial performance will be established. What will be the impact on the overall? You provide the quantitative basis for improvement, highlighting potential financial gain. Now we move to the analyze phase. What would be your input? Deep analysis of the data to identify cost drivers and inefficiency. Remember, in each phase, Those will be the input, the output, the impact. What will be the output? Identification of root causes which will affect financial performance. What will be the impact? You prioritize area with the most significant financial return on improvement. Now we'll move to the improve phase. What would be our input? Implementation of solution to address identified financial leaks. What will be the output on that phase? Enhance processes and reduce inefficiency. What would be the impact? Would be a direct financial benefit realized from operational improvement. Remember, this is the area where we do the piloting. That means we take one section, apply all this improvement to it, and see what's the outcome. So we will see the benefit and compare it to the current status. Example, reduced cost, improved revenue. Now we will move to the control phase. Here our input will be what? To monitor and control system implemented to sustain improvement. What would be our output? Standardize new processes. And the impact, of course, ensuring continual financial performance and prevent regression, means going backward to the way it used to be. Remember, this flow chart serves as a roadmap for stakeholders to visualize how each phase contribute to achieving overall financial goal of the project. Because remember, management only see numbers, they don't see theories, and some of them don't even understand what goes behind those theories. But out of those theories, they see numbers, and that's what they are concerned about. Okay, now we move to what we call it a case study. In this case study, we'll illustrate a structured approach using the DMAIC methodology to significantly reduce energy cost. Here we'll be tackling a production. Okay, so we want to reduce energy cost in a manufacturing environment. We'll focus on the major energy consumption system and processes. The project not only achieve its financial goal, but also set a standard for future operational improvement. The objective here, what? To reduce energy consumption in a manufacturing plant to save 600,000 annually. First, we'll go for the define phase. Okay, in the define phase, we'll do what? There is a problem statement. The plant energy cost have increased by 20% over the past 2 years, which impacted overall profitability. What's the project goal there will be? We want to reduce total energy expenditure by 15%, aiming to save approximately 600,000 annually based on last year's total energy cost of 4 million. What's the involvement of stakeholders? You will engage plant manager, production staff, maintenance team, and finance department. What will be your financial baseline? Of course, you have to have a baseline to work from that point forward. Will be the current annual energy cost of 4 million. Now, what's gonna happen? We're gonna move to the major phase. Okay, the major phase, that's a phase of data collection. You will gather 24 months of utility bills and machine usage records to establish a current energy use pattern. Okay, then what will be your initial matrix? You will identify key energy consumption processes and equipment that contributed to that 70% of total energy cost. What will be your baseline? You have to base it on something. Each phase based on something. Your average monthly energy cost right now is about 333,000 and some change. Okay, now you're gonna move to the analyze phase. Here, the first thing you start with is the root cause. Use like Pareto analysis, which very good, in determining, where is, remember the idea of 80-20%, where 80% of the problem coming from 20% of the material. Here you use Pareto analysis which found that 60% of energy was consumed by what? Outdated HVAC system and inefficiency machinery. Financial impact was, you calculate, potential saving from upgrading this system and optimizing those equipments. What's the solution formulation here? You will develop strategy, focus on high impact areas, which will maximize energy saving. Now comes to the improve phase. Here you will implement solution. You will upgrade the energy efficient HVAC system. You will install variables frequency drives or major motors. You will implement schedule for regular maintenance and checks. And remember, you need to run a pilot program, like about 3 months trial on one production line to measure that energy saving. And your outcome will be your pilot line that you did, because remember, this is a study that will show 25% reduction in energy cost, projecting an annual saving of 250,000 from this line only, not for the whole process. Okay, because this is pilot only run on a single line. Now you go to the control phase. In the control phase, you will do what? First, you will do standardization. You will roll out successful strategy from the pilot across the entire plant now, not just one area, but the entire plant. And then you will monitor the system, where you will implement an energy management system to continuously track energy usage and cost. And then you will do a training and policy, where you will develop training programs for staff on new equipment and energy saving practices. And a final financial outcome will be your total projected annual saving of 600 achieve that you have set up in the beginning. This is a case study in a manufacturing plant. So now we're going to go for a case study in the service plant. Okay, concept will be the same. It just can cater to both areas, because some people are interested on how they can implement this methodology and study on the process production sector, and some in the service sector. Okay, so now in the service sector, first thing you'll do, you will go for the define phase. Here, first of all, what's the case is all about. This case study demonstrates how targeted improvement in customer service operation can significantly impact overall business performance. So in the define phase now, here we have a problem. Long customer service response time, which led to 30% customer complaint rate, and decrease in customer retention. What's the project goal will be here? We want to reduce times by 50% and customer complaint by 40%, which will aim to increase customer lifetime value and will contribute an additional 5 million in annual revenue. Now, what will be the stakeholders' involvement here? That's very important, because they are part of the deal. Who you will engage? You will engage customer service rep, IT's, support, management team, and marketing department. What will be your financial baseline? Your current cost, of course, of poor customer service, which estimated at 7 million annually that you are losing due to loss of customers and negative market perception. That's all will be happening in the define phase. Now in the measure phase, you will start doing data collection. You will analyze the average response time for customer inquiries over the past 12 months, including both phones and digital channels. What will be your initial matrix? Current average response time of 10 minutes with a complaint rate of 30% related to service delay. Then what would be your baseline measurement? Will be detailed tracking of customer, of course, interaction, response time, and follow-up satisfaction survey. Now we're gonna move to the analyze phase. In the analyze phase, you're gonna start first with what? Root cause analysis, where you will identify key bottleneck, including understaffed service hours and outdated CRM software. Now, what would be your financial impact analysis? You will assess the cost of additional staff and technology upgrades against what? Against potential revenue increase from improved customer satisfaction. What will be your solution formula here? You will develop a plan to optimize the staffing schedule and upgrade CRM system to handle inquiries more efficiently. And now we move to the improve phase. In the improve phase, first thing you start with implementation of a solution. You will upgrade your CRM software to a more efficient AR-powered system. You will implement new staffing model based on peak inquiry times. You will introduce ongoing training programs for customer service staff on handling inquiries efficiently. First of all, you have to do a pilot testing. Always in the improve phase, you do a pilot testing. Test new system and processes in one service center. Let's say one area in the region. Let's say you have 6-7 region. Just test it in one region. If it works, then you can, implement it all over the other region before company, a wide rollout. What will be your financial outcome here? Financial outcome will be that reduction in response time, which will lead to a 40% drop in customer complaints and increased customer satisfaction. Now we move to the control phase. In the control phase, the first thing you do, standardization. You will expand successful strategy that you have developed in the improve phase from the pilot program across all service center. Then you will start doing monitoring your system. You will establish real-time monitoring of customer service interaction to ensure continued adherence to response time standard. You will do training and policy, where you will regularly do refresher courses, which will update to all operational protocols to maintain service standard. What your final financial outcome? You will achieve probably around 5 million increase in annual revenue from improved customer lifetime value. You see how important it is? Applying, DMAIC and the concept of business, performance and financial measure throughout, the phases of DMAIC will ensure we reach the goal we set it up at the beginning. So now I hope you understand the concept from this two simple case study, one related to the process and one related to the service. Now let's move on to another subject, that is really very much related not only to this concept, but any concept you try to inject into any company, and that is the common challenges that you'll be faced with. First, aligning team. One of those challenges. What's the issue will be here? Different departments may have varying priorities, which can lead to misalignment on the objectives and use of financial analysis tools. And some, of these people might have their own agenda, the employees themselves, so you will be facing this, misalignment continuously, so you have to address it at the beginning. This misalignment has a great impact. It can result in inconsistent data interpretation and will underutilize of the tool's capability. And data accuracy issue. What's the issue here? Data entry errors, outdated information, or poor data integration can compromise the accuracy of a financial report. And the impact will be inaccurate data can lead to faulty analysis and potentially costly business decision. Now, another one, maintaining focus on financial outcome. What will be the issue? Team may get sidetracked by operational detail or overwhelmed by the capability, of complex software, losing sight of the primary financial goal. What would be the impact? This can dilute the effectiveness of the financial analysis effort, which will lead, of course, to suboptimal strategic decision. And now let's move on to strategies to overcome those challenges, because challenges will be there. You cannot avoid them, but you have to maneuver around them. First thing you will do, improving team alignment. What will be your strategy? You will implement, cross-functional training session and regular alignment meeting, of course, so to keep reminding the people and ensure all departments understand how to use the financial tools in the context of the organization's broader goals. What would be the benefit? You will enhance collaboration and ensure consistent application and interpretation of the financial data across the company, so all of them are on the same line. Not everybody interpret the financial metrics goal in his own way. Then you will ensure data accuracy. That's very important. Strategy you will implement. You will establish stringent data governance policy and use automated data validation tools within financial software to reduce human error and ensure data integrity. So nobody interpret the data or deliver the data according to his understanding. The benefit will be here. You will maintain the reliability of financial reporting, which is crucial for accurate analysis and decision making. Then you will focus on financial outcome. What will be strategy you will use? You will use regular review and realign financial analysis project with strategic financial objectives. You will utilize dashboard where everybody in the company can see the result, and a lot of feature in financial software, for example, if we are going outside the control limit, to keep financial outcome front and center. What's the benefit you will gain out of it? You will help keep the team focused on the financial metrics that matter the most, which will ensure what? That operational activities are directly contributing to financial goals. So now, what would be our best practices in the DMAIC project? That the one we will think really will make the project work mostly and become very effective. First, we have to set realistic target. It's important because realistic target ensure that projects are achievable and aligned with business capability and market condition. Don't just make a target that cannot be achieved, because that will create a negative impact on your employees and will make them really don't want to continue to achieve those goals because they know it's impossible. Use historical data, and benchmarking against industry standard to set achievable yet challenging goals. Involve stakeholders, of course, in the target setting process to ensure buy-in relevancy. Involve financial, an analyst in project team. Financial analysts bring critical perspective to the team. They help quantify the financial impact of the process changes to the employees, which will ensure that your project is aligned with the financial goal of the organization. Strategy you will use include financial analysts from the beginning of the DMAIC project. Their expertise in data analysis and financial modeling which will aid in the accurate measurement and analysis of the project impact and make it clear to the common people. Then you will continuously communicate the financial benefit. That's the key. Regular communication about the financial benefit of the DMAIC project enforces the value of continuous improvement effort and motivate ongoing support and participation. Strategy you will use: you might develop a communication plan that include regular update during team meeting, reports to management, post an internal performance on a platform, and highlight both achieved and projected financial benefit. And now let's move on to implementing those benefits. What I would say here: do a regular review session. Hold regular session with project team and stakeholders to review progress against target. Discuss challenges and adjust goal as needed. Do also training and development. It's very important. Provide training for team members. Include financial analysts, on DMAIC tools and techniques, which will ensure that everyone understand how to apply them effectively. And then do success story. Success story always, get the morals up in the positive way. Share success story and case study that clearly demonstrate the financial operational benefit of completing the DMAIC project, maybe with your peers, with your competitors, how they did it and how they succeeded and how they are dominating the market. This is not only motivate team, but also educate the wider organization about the value of those initiatives. Now, also, what's the benefit of best practices? What you will do? You will enhance accuracy in targets. Setting realistic targets based on solid data and comprehensive analysis ensure that projects are both feasible and ambitious. Then you will improve financial oversight, which will involve financial analysts, ensure that projects remain focused on delivering quantifiable financial return, which will enhance the financial accountability of process improvement. Then increase organization buy-in. Those are best practices. Regularly, of course, communicate the financial benefit of the DMAIC project. Will help build a culture of continuous improvement and secure ongoing commitment from top management, and team members. By adhering to these best practices, organization can better manage the DMAIC project to achieve significant improvement in processes that translate directly into financial gain and enhance operational efficiency. I hope this video and slide were beneficial and educational to you to understand, how you use, business performance and financial measures within the DMAIC and Six Sigma concept. Goodbye.